Are you down with OTC? Are you down with OTC? OTC. Are you down with OTC? Are you down with OTC? OTC. Are you down with OTC? Down with OTC.
In 1 minute. Let's get this going. Right, he's down with OTC. That was late. Got held up a little bit. We had to make the call. 30 seconds.
OTC.
Come on. 10 more seconds.
Down.
All right, here we go. A little bit of a pause. Black screen. All right, come on, let's go. What is up with this delay? Come on, there we go. There we go. Holy cow, that's got to change. I don't know what's up with that. It was like that delay was actually longer than the timer. I had to put that timer on. Sorry, guys. I had to run out. Had to get the coffee going. I was out walking this morning, ran into multiple neighbors. Whenever I leave just a little bit late, I get waylaid by neighbors. And then you got to talk about politics and about whatever. And I kept looking at my watch. I'm like, oh, God, I got to get back. But welcome. This is Jeff. If you guys don't know, you can read it right there on the screen. You're here on the chain. The Hot Review, 8 a.m., 8:15 a.m. Eastern Standard Time. Today, we are going to be talking about XRP, Bitcoin whales, the IMF, and a lot of other things because I want to find out who is really in control. And I'm sure, everybody here wants to find out, who's really in control. Is it all about decentralization? Is it all about centralization? Is there really somebody else that is pulling the strings to everything that is going on right now? Is the digital asset investment community actually in a decentralized environment? Is Bitcoin, XRP, and every other digital asset, are they being manipulated by the big banks? Man, see that? I just get started. I say IMF, and just like that, DNI bounces into the room, and it's all good. You know what? I'm not even going to kick it off and start the intro because we already had the 3-minute delay intro. So let's just kick it off. Let's get into it. Let's keep it going because Texas XRP knows what time it is. It's OTC time. It's espresso time. And for all those that are coming in the afternoon from wherever you might be, it could be all the way from England. What is up, Michael? Big John. And then the conscious question of the room is that every time there you invest, it goes down. So that is the big one. We got TD73, PS Crypto, Devon Steve. What is up, everybody? What is good? So check this out. I'm going to go a little bit DNI style on this because I started looking at some different interactions, so a little bit of discourse, and I started thinking, what is really going on? What is the IMF up to? So here's the big question of the morning. Is this the beginning of a new world or a new world of peer-to-peer money, or is this more the beginning of a new world order economically, politically, and everything else? When it comes to the digital asset space, can the digital asset space maintain the decentralization or not? And right now, the IMF came out and said that a universally accepted central bank digital currency could radically transform the status quo of the global payments and the financial systems. That to me is a major red flag when I see something like that. When I see a big statement coming out from the IMF, talking about what could reshape the future of global payments from a centralized perspective. And then this is the IMF. So then what this leads us into, DNI, this is totally, on par. So what this leads us into is, does the IMF then have some form of say-so when it comes to that global currency? Is that even the right place for it? It really becomes very disconcerting when I see some articles dropping with statements like that they want to transform. You see the transformation. So when we're in the private space, you think about like what we see going on with Ripple taking on Swift. Obviously, Swift has dominated the exchange mechanism, the communication of banks moving money, all over the world. Obviously, Ripple can do that a lot better and bring about 4-second settlement, which Swift isn't a settlement mechanism. It's just a communication mechanism. However, when we start looking at a global stable coin, and this is, kind of on par. So one of the things that the paper from the IMF pointed out, they talked about Facebook's Diem stablecoin as a private attempt for a global stablecoin. And I don't know how you can really wrap it in that kind of phraseology, that it's their attempt to create a global stablecoin when every digital asset can be considered global, can be considered decentralized and global in nature, and really any stablecoin could then be considered global in nature. DNI, here we go. So I was told, yes, any global restructuring financial will be managed by the IMF. Yep. And so, I see a lot of issue with an IMF type entity that is going to then try to manage and transform our economics. Not necessarily with our best interests at heart. And this also goes back to one of my primary premise points, is that in order to maintain sovereignty within a country, you have to maintain the sovereignty of your currency, which is one of the bigger upsets over the years with the euro in the EU, is that the countries lost their identity, their sovereignty by relinquishing their currency, which the UK, England, Scotland, not, if you go to Ireland, they run off the euro, but England's still running off, of the pound. And so that was one mechanism in place to keep their sovereign identity. And so as we move and transform into some direction in the digital asset space, who is really in control, and how do you maintain your independence and your privacy as an individual, not just from a country perspective, but as an individual, sovereign privacy. And I think that becomes, extremely, difficult to absorb. So, we have XRP, Bitcoin, Ethereum. We have all these other digital assets out there. We have the stable coins. You have USDC. Obviously, you have Tether, and there's a lot more of the stable coin that is coming out and so, within this movement, again, I try to focus in on, the sovereign aspect of it, whether it's going to be sovereign for the U.S., whether it's going to be sovereign for Thailand, or sovereign for, England, or sovereign, for Mexico or Canada or wherever, really, really important. What I thought was interesting is that, in this paper, they talked about the U.S. dollar, and the dominance of the U.S. dollar is something that they believed is still, a critical element in, obviously, in the economy now, and it will maintain dominance in this space. But again, they're focusing in on, how can they disrupt and transform the payment space. I don't like the globalist idea. I don't like, the new world order, economy isn't really my thing. So here we go. DNI, decentralize off your governments and large corporations as much as possible. Yeah. So, and I think that's important. And DNI brings up another very important fact, which is the corporations, the large corporations, which goes back to really where I started with this whole thing to begin with. Over the past weeks, I've been following this movement and this trend of the big corporations, the big banks, the big financial institutions moving towards buying into Bitcoin. And so you have to really, consider again, who is it? I find it interesting that, Bitcoin originates, in 2009, 2010, if the original paper, the intent was to move away from the banking system to give power to the people, the money of the people back in the hands of the people, yet the very institution that it's supposed to be taken from, now Bitcoin is identified more as a reserve, as a, I don't want to say stable reserve, but it's more in long-term store of value. You can't rely on a fiat currency. It's hard to rely, obviously, on stocks, gold. There's obviously a lot of issues, but these corporations are looking at the big money play. And so as these big corporations get in, I just found it really interesting because these big corporations are also transforming the identification of this space for good and for bad. For good, because as these big corporations come in, we saw Mass Mutual buy-in for 100 million. We saw that was a rougher $745 million in Bitcoin. And that transaction, incidentally, was actually done on Coinbase. So could you imagine going out and you're buying 745? Now, do you buy $745 million in digital asset or Bitcoin? Do you do it all at once, or do you do it over a period of time? Because is there such thing? So in the big, the big financial institutions, they hold, huge amounts of shares. So when they're buying or selling shares in a company, they transact relatively slowly and do buy-ins. They don't do a full, hey, here's $1 billion, let's buy that one share right away. So as not to disrupt the price volatility. And so here, are we seeing these big corporations, as you get that FOMO spike in the retail space, are the big corporations the ones that are now responsible for pushing the entire market in this, positive green direction? And I think that's something to observe and look at, because on the other side is to monitor when the big corporations decide they want to try to get out. Are they in it for a short-term gain, or are they in it for, a longer-term gain? And I think that that's definitely something to consider, something to look at, outside of all of these other great things, because on the positive side, the market's is going crazy, right? So we're starting to see, let me pull this up real quick. Let me pull up the fiat leak. You're starting to see just massive momentum. We saw Bitcoin hitting all-time highs. You're probably saying, hey, why are we talking about Bitcoin only right now? But you're starting to see XRP also maintain and hit a certain level of a lack of volatility, because even though it's hovering in a space, we saw XRP actually drop back down into the 40-cent range. I think it was down like 48, 49 cents. Right now, it's sitting at 58 cents. The one thing that we're beginning to see with more money in the space, you will get less volatility. You might still have big price movements, but you're going to have less of it. You're going to have less volatility over time, not now, because the space is so tiny. The volume overall is still relatively tiny. So big buy-ins, these big whales, and we have to identify who are these big new whales, because the whales of yesterday in the Bitcoin space might pale in comparison to a rougher that comes in and buys, $750,000 in Bitcoin just like that, or a Mass Mutual that buys 100 million, or a MicroStrategy that puts in and buys $425 million worth, and then another 50. So he buys $475 million worth of Bitcoin. All of a sudden, he's a whale overnight. Rougher is a huge whale overnight. You see some of the big exchanges, obviously, holding, a significant amount, but how is it that you get, groups like these that overnight become whales, and are they putting the other whales to shame? That is, that's the big question. So, got to drink it sparingly. Make sure, I forgot to talk about the espresso. So I said I was making it. Today is a Segfredo morning, so you guys make sure you get that espresso, because we're going to need it to get through a little bit more of what we're talking about here. So, I think, as we begin to identify the governments that are looking at the digital asset space, the corporations, the financial institutions, the banks, you're starting to see not just, recognition of the digital asset space. You're starting to see buy-in into the digital asset space. And that is, if you think back, for anybody that's been in the space, a year, 2 years, 3 years or more, the one thing that we talk about, at least on our channel, we talk about it a lot, which is adoption. When is there going to be, more mainstream adoption, not just mainstream at the retail level, but mainstream adoption at the corporate level. So now we're starting to see that. We're starting to see that adoption. We're not seeing full utility of it. We're seeing the recognition or identification of the store of value on the Bitcoin side. We're starting to see some observation of what's going on with XRP, because these big financial institutions, when they get into the space and they start investing and they look at Bitcoin and they look at Ethereum and they look at the projects and they say, wow, these are obviously Bitcoin first mover advantage, lots of identification, again, store of value. Then you look at the Ethereum and you look at the project, and you're starting to see more and more discussion over the incorporation of the Ethereum smart contract, in getting involved in the business aspect of things. Now, the direction then turns to XRP. It says, okay, what is the utility of the third largest digital asset? Think about it in the minds of these corporations that are typically investing in projects, right? They're not typically investing necessarily out in the open in currencies. So when they invest in a Bitcoin, they're not running out and buying euro at an all-time low and putting it in their stockpile. They're looking at mechanisms of store of value and making more money. So they look at the Bitcoin, they look at the Ethereum, they look at the projects. Bitcoin, no project really, store of value. Again, first mover advantage in the field of the digital asset space in general, the grandfather of the digital asset space, Bitcoin. So of course you got to buy into that. And they are predetermining at this point the potential value of the Bitcoin. And why are they predetermining it? Because they're all jumping into it. Now, you don't buy into Bitcoin at $19,000, $20,000, $22,000 if it's going down. You don't buy into it at $20,000 if it's going up by $1,000 for that $1,000 movement. If you're like that Michael Saylor from MicroStrategy, he buys in and sees it rise up, doubles his money because he bought in around 10,000 and he bought $425 million worth at 10,000. So now he's sitting at 23,000. He's made obviously, significantly more. Now he's sitting on, like $900 million. That it's amazing. He's almost at $1 billion. He might be at $1 billion if you want to run a calculation on it. He could very well be at $1 million already, or $1 billion, sorry. And he made $500,000 in months. I mean, it's amazing. But is he in it for that short-term gain? Does that $500,000, is it meaningful for like Ruffer that has, what did we say the other day? It was like $200 billion, under custody for their investment, and here they are running out. Or was that? And they're running up 745 million. But then you have like Mass Mutual. I think they had like 200 and something billion dollars, and they're putting 100 million to them is nothing. $1 billion to them would be, maybe a big decision. Ruffer did it. Ruffer almost put $1 billion in at 20,000, 20 something thousand. So where is the direction of this space going? Are they now predetermining the outcome? Because are they in it for the doubling, or are they in it for the big gain? That's what we look at, and it's interesting. And so then you go over, to the next project and the next project, because at some point they're looking at the massive gains, and they're like, again, it's project based. So Bitcoin, Ethereum, XRP, guaranteed. I feel, anyway, my opinion, it's just human nature, company nature, as they transact through the digital currencies, there is an identification. Okay, what is Ripple? What is XRP? Sorry, what is the major use case? Okay, it's moving money seamlessly, inexpensively. Can you do that with Bitcoin? No, it doesn't have the same use case as an XRP. Does Ethereum have it? No, Ethereum also doesn't have the same use cases. The XRP is still unique in that space, especially in the top three. Seeing that, there's the idea, the money, and the big corporations and the banks understand the obstacles to moving money, cross borders. They understand it. They live it every single day. They know the cost. They know the delays. They know all of that. So now as they look at the project and say, okay, what is XRP? How does that fit in with Ripple as an example? How does that fit in with other projects? But now you have another competitor on the scene, which is a nice balance and works in conjunction with, which is also the Stellar project and XLM. So it's really, really interesting, to see the dynamics. But then, how much money, who changes everything? Who is, what is the impact on the digital asset space? We saw with the retail space, a microcosm, just a microcosm, because most new investors in the space over the past 10 years is just a fraction of every possible retail investor in the space. What is it, like 1%? I mean, it's so minuscule. The upward potential in the retail space, most people haven't even FOMO'd into it yet. People are now seeing it. Why are people seeing it? Because Fidelity is going to see it. JP Morgan is going to see it. All the big banks are seeing it. They're not that they're going to see it. They're seeing it, and they're dipping their toe in. Mass Mutual, an insurance provider around for 175 years, sees it, and they're dabbling. Hey, let me test it. $100 million. Here, let's go. Now, for any retail investor, even the big Bitcoin whales, are they going to dip their toe in a project for $100 million or $745 million? They're not going to do it. how many Bitcoin whales out there are sitting on billions of dollars to where they could say, hey, I'm going to throw $1 billion at this thing and see if it sticks. It doesn't work that way. It's amazing. And so that's the difference right now in the space and the direction, and the whales are shifting. So the big whales are shifting to where the corporates are. Now, one thing that we've always said is that we're early in this space. What's unique about this is that typically it's the corporates, the financial institutions, and the banks, the governments. They are the ones, the initiators of value like this. Obviously you have the companies build up and you issue your stock, but the point is they're the initiators of the asset class, right? So now all of a sudden, obviously there's other, you don't have a stock if you don't have an individual working in his garage building a computer that builds up a company that can then issue the stock, but the asset class itself. And so now you have something that came out of somebody's garage, basically an asset class that we still don't know. I don't think anybody really knows. You can dig into it and everyone can have their theory of who Satoshi was, and what was really behind the thought process that really went behind Bitcoin. Was it government? Was it another agency within government? Was it individuals? Was it IT? What was the motivation behind releasing Bitcoin? And it's a decade, a 10-year span. What I find is also interesting is that typically in a financial economic space, economics move in waves like the finances, and typically you have a 10-year span, which is like a good measurement of the movement of the financial space in the economics, the ups and the downs. Is the sound a bit? There we go. How about now? If it was hopefully it wasn't a bit distorted the whole time, but I just plugged it back in. It looked like no sound. How about now? Test, 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 test. It looks like I have sound right now. Oh, you know what? It's on the wrong microphone too. Okay, how about that? There we go. What happened? All right. I don't know what happened. I hit the cord in the back of the microphone. Of course, bad news. Bad news. So, so big disruption. Big decisions here. Back to that point, $500 million is loose change to these guys. Exactly. So the big institutions, they definitely, they walk around, they control and they can dictate the direction of a market by putting in. So that's where you have MicroStrategy. At this point, he's got 475 million in that they invested in the space. Mass Mutual, 100 million. Ruffer, 744 million. So you start looking at that and think about, well over $1 billion between three companies, over $1 billion in Bitcoin purchased. And then you have obviously, others that are getting in this space. You got the, PayPal definitely, moving in this space. And you've got, one corporation after another that we're going to start seeing following the trend of buying into the digital asset space. Right now, the focus is on Bitcoin. That will shift, in my opinion, especially as the shift is looking at like projects like Ethereum and others. So let's see, Spanner Monkey, are the big corporations into XRP as much as BTC and just not publishing it? See, that's a possibility. They might only be publicizing that they're buying, but they might, they definitely have to publicize if they're buying, they're buying anything. I believe they have to acknowledge it to the SEC if they're buying that kind of quantity. Like when MicroStrategy bought, because it's coming out of their fund, it could be in their capital fund, their cash fund, whatever it might be. They have to make an announcement, especially to their shareholders, what they're doing with their money. So in that case, I believe it needs to be publicized when they make that transaction. I believe, I could be wrong, but it has to get out there somehow. Are they as educated in XRP as
as they are, like we were. Let's see, i.e. you're drawn in by Bitcoin, then do your research. I think that, yeah, Spanner Monkey, and that goes back, I touched on it, and maybe, I was reading your comment before, but I do believe that, well, first and foremost, I don't know that most corporations are educated on Bitcoin. I think that, they're seeing the possibilities of the Bitcoin right now as their store of value, as a mechanism of, they're seeing the direction of this space. They're seeing it blow up. What's interesting also, we talk about being early, and a lot of people complain, oh, I didn't get in early enough, it's too expensive, like with XRP or Ethereum, whatever. It doesn't matter, whatever digital asset. Oh, it used to be 10 cents, now it's 50 cents. It used to be $50, now it's $100. But the thing is, and it really comes down to the direction and the decrease in volatility of a space. So the banks and the financial institutions and the companies, my opinion is that they were waiting on the sidelines, waiting for that moment in time when they see, an increase in the volume in the space and a decrease in the volatility. Because if you have an increase in volume, so when they come in, they increase the volume that much more, and then they're seeing even more involved in the space, more build out, more acceptance, more development. Then it decreases. You want to see a decrease in the volatility and the big swings, even though they're still going to be there. But for them, whether they bought at 10,000 or 20,000 is insignificant, because when they put their $400 million in, they're still going to make a ton of money. So that it becomes like it's not even, as relevant to them. However, they also see, other projects, other big opportunities, etc. So somebody said, let's see. Oh, Channing, what is up? By the way, Channing is going to be on with us tomorrow night on the roundtable. Looking forward to that. And the roundtable is every Sunday evening at 8 p.m. Spanner Monk, I totally agree. These purchases they've made were before September, because the prices were mostly purchased were at 10,000 for a lot of them. They're late in their announcements. Yeah, that could also very well be that their announcements came a little bit later. I like that, Spanner Monkey. Yeah, in terms of transaction, yeah. So I think they're looking at it, and you have to believe that at least they're testing, they're educating. It goes back to they are educating themselves on the space, learning about the space, identifying the space, and the space will grow. Definitely will grow. Let's see. There was something else here. Chip, yeah. You know what? You can always just blame Chip for the microphone issues. So that's funny. All right. So back to this. Where did that one go? And there he is. See, you say blame it on Chip, and Chip bounces in. I bring up IMF, and DNI bounces in, and that's just how it works. It's hilarious. All right. So moving on. So here we go. Again, thinking about the CBDCs, and Chip and I have talked about this a lot on the central bank digital currencies and how the centralized mechanism. Now, some of the central bank digital currencies they're talking about building them on the Stellar platform. They're looking at blockchain. They're looking at digital asset solutions that are in existence today that they can take advantage of their networks. Then you have other central bank digital currencies like the digital yuan that has nothing to do with transparency, has nothing to do with being decentralized in nature, has nothing to do with being built on the blockchain, has everything to do with being centralized in a mechanism to control the ebb and flow of people's financials. And it's also a very clear-cut mechanism to destroy or take away the privacy of the people. So that's a big differentiator in what we're seeing. So we're seeing more and more discussion of the CBDC, similar to how we saw the discussion of the digital dollar as a mechanism to quickly get out money to people in need. Now they are hiding. Now here's the difficult part that we have to see through is when governments are hiding behind they're hiding behind issues, let's call them, that have come up, and they're going to try to then push through their agenda wrapped in a mechanism that looks like they're trying to help. So, for instance, obviously we know the economy took a bit of a hit when the country started shutting down, and we see some of the states in the U.S. that are being extremely barbaric to their people by shutting down small businesses and only allowing big box businesses to function and operate incorrectly. Because the small businesses, in my opinion, that's the lifeblood of America. And if you're going to allow the small business owner to suffer, even your measly $1,000 that you're going to send to people, your $600, that's what they're talking about now, to send people $600. Why would you wrap that as a mechanism of helping when your policy and your naivete has led to the downfall of the economy by shutting down the small businesses and not allowing them to function and operate, and then also not operating within the realm of real science, which is a whole different conversation. And I'm sure there's a lot of people that would disagree, and we can discuss science all day long. We can also discuss the science of testing that is 100% inaccurate in the mechanism that they're doing it right now. Scientifically proven that the way they do testing is inaccurate right now, and doesn't give people the right results. But that's a whole different conversation that we can get into. But it makes sense because this is coming from the same political leadership. Most politicians are lawyers, not economists, not physicians, lawyers. Now, I don't go to a lawyer to do my taxes. I go to my CPA. I don't go to my CPA for legal advice. I go to a lawyer. I don't go to a lawyer to get medical advice. I go to a doctor. And then when I go to a physician, I'm very, very selective in the physicians that I work with, because not all physicians have your best interest at heart, because they don't know. Think about that one. Just like you go to a CPA, your CPA might not be as well versed in the digital asset space in order to prepare your taxes the right way to protect your interest. So you have to look at that and say, hey, Mr. CPA, what do you know about digital assets? Can you please read the legalese and consult your lawyer if you have to figure out how you're going to prepare my taxes when it comes to digital asset. Now, you're not going to go to H&R Block or one of these shopping plaza tax preparation places to do your taxes, because they probably don't understand the fundamentals of how to prepare your taxes in the digital asset space. So too, as these politicians that are very narrowly focused as their education and their life surrounded legal aspect as a lawyer, they're not very good in finances or economics, yet we're allowing them to make decisions in our life that have to do with economics and finance. They don't even go out and consult necessarily with the right people in order to make those decisions, because it becomes very opinionated and ideologically driven, the way they make their decisions. So, so again, similar to if you go, how you select the doctors, etc. Now, this becomes important for us to look at in the digital asset space, because then as our politicians are discussing regulation and regulatory clarity, we have to understand the direction that they want to bring this asset class. We want to understand the impact that they're going to have on this development of this space, country to country to country, whether in the U.S., in Europe, or elsewhere. Now, you have certain politicians in the United States that have put bills on the table recently to present in front of Congress. One of them, Rashida Tlaib of Michigan, left-wing socialist propagandist. And, she is making an attempt to, in her bill that has to do with stable coins, to remove the stable coin potential from the fintech, from the tech-oriented companies, and say you're no longer allowed to create a stable coin that is now solely in the jurisdiction of the bank. So what she's saying is the bank is now the one that is in control of the digital asset development, however you want to look at it, because it will start with a stable coin and then it moves on from there. Once they take, they never give back. So you have to be very cognizant of what's happening in the regulatory space as it pertains to our digital asset investments. Now, when you look again at the CBDC, that's how I got off this tangent. I kind of got off topic when Chip came in. So let's blame it on Chip for, pulling me off topic here. But we don't want to really delve always into the politics of the matter, but the politics of the matter will impact your investment, especially when you start seeing discussions over the central bank digital currencies, the digital dollars, the digital euro, the digital yuan, etc. And then we have to look back again, who is really in control of the development of the space? The corporates, the financial institutions are becoming the new whales in the space. Why are they the new whales? Because they have so much money that they can, as we were talking about earlier, they can definitely upset the space. Right now, it's to the positive growth. So the one, again, I'm not looking at this from a negative aspect, but the corporates coming in, making a big splash. So before we had the small whales, now we have bigger whales, and soon there'll be even bigger whales. Now, this also goes back to the digital asset exchanges and the banks kind of conflicting with one another. The disappearance of the banks, the disappearance of the brick and mortars. That's all important because you don't need, they're heavily weighted. Most of these financial institutions, as far as maintaining our banking in the space, etc., are so overweight and weighted down. They can't make quick movement. So as we start seeing some of these other fintech banks and we start seeing some of the digital asset exchanges getting into banking, Brian Brooks wants fintech to easily be able to get into banking licensing and banking charters. Why? Because the digital asset exchanges are the banks of the cryptocurrency space. JP Morgan isn't the bank of the cryptocurrency space. JP Morgan, Fidelity, or Bank of America, all these guys, they pay on interest. They'll pay you 0.5% interest on your money in your savings account. They'll charge you 7%, 8%, 10%, 15%, in some cases 20% interest on any kind of loan that you take from the bank. So think about the gouging it takes place from a banking perspective. Now we need the bank. We need, the bank to finance our cars, and you might be at a 2 or 3% interest. It might be a 4%, 5%, 7%, whatever that interest rate is. Mortgages, obviously, we've seen a setback. Mortgages they've been as high as 15%. They can average around 7%. Right now, they're at all-time lows around 2%. We're starting to see negative interest rates because of the economics going on externally. However, in the cryptocurrency space with these digital asset exchanges like a Celsius and many others, you're starting to see them paying out interest rates of 3.5%, 5%, 10%, and sometimes as much as 15%. You say, how can they do it? What are they lending? So like a Celsius, their primary lending arm is going out to institutions. And so that's also interesting. I would like to uncover that a little bit more. We've heard about it. I would like to see and dig into it more, and which we will do. But you're seeing that the possibility is there to pay people higher amounts of interest on their money versus where the banks are. And that becomes really important. That changes the whole structure and dynamics of the space of who's in charge. Because one of the things that Alex Mashinsky had told us when he was on the show a few months ago was that the titans of today, or at least the titans of yesterday, in terms of the financial and banking space and some of the big corporations in the, even in the high tech space. When we come out of all of this, we're going to have a whole new leadership. There's a whole new leader class. Right now, there's a lot of jockeying for power, politically, economically, corporate, and that is going to have some determination on what we're going to see in the future. However, we're also going to see a lot of the cryptocurrency built, blockchain built leaders in those key places of leadership in the near future. That's the shift, because you get away from the brick and mortar, become more nimble. You're not weighted down by too much personnel. You don't need as much personnel to function. You don't need all the brick and mortars to function. It changes. Now, with all this change, again, we have to really look at the cost to the individual of privacy. That becomes really, really important. Maintaining the sovereignty of a country, maintaining the sovereignty of an individual through your privacy of how you maintain your money, where you spend it, who can track you, who can't track you, how it can be done, etc. So, I mean, there's so much to talk about. I can't believe I spent my entire time, talking about this instead of getting into everything else that I wanted. And sorry, I've missed a lot of what's going on in the chat. I just kind of went on to kind of just drifted off into this topic. But there's some new names in the space. I always love seeing new names popping in here. Old names, new names. We've got so many great people in here. Love, if for all those new people in here, make sure you guys hit that subscribe button. And when you hit the subscribe, hit the bell notifier, because you'll be notified every time we go live. We also have another channel. We post short videos on the other channel. So make sure, you pop over there and check out what's going on on the other channel. Now, we stream 3 times a week on this channel for right now. Maybe we'll add another one. I don't know. But Wednesday evenings at 8 p.m. Eastern Standard Time, Saturday mornings, today, 8 a.m. Eastern Standard Time, and every Sunday at 8 p.m. Eastern Standard Time with the Roundtable. Chip and I co-host Wednesday and Sundays, and then right here on the Huddle Review. There's just so much going on, so make sure you guys hit that sub button and check that out. Devon Steve Celsius also hands over 80% of their earnings. Banks will never do that. That's a great point, Devon. Really, really great point. I think that's one of the key points right there. William Whitmore, efficiency, blockchain will improve life 100%. I want to get to a point, and you got to believe that the governments are afraid of this, and I think we're going to get there faster than we can imagine. Blockchain is critical in order to maintain the transparency of government, whether it is from a financial perspective or to make sure that we're holding the politicians accountable for everything that they do, what they vote on, what they do, what they spend their money on, how they function, how they operate, even their individual offices, where they travel. Everything needs to be transparent. The politicians are the employees of the people. And so blockchain is going to definitely dramatically shift the balance of power potentially back into the hands of the people. That's what it's meant for, in order to maintain that transparency. Put voting on the blockchain, one vote, one person, no shenanigans, no cheating, make it easy. Attach, this is kind of delves a little bit into your privacy, because there could potentially be some sacrifice, but you have to make sure that the voting rolls are clean and checked. And the way to do that, automatically through a blockchain type environment will have a big impact. But anyhow, you guys are absolutely outstanding. Chip brought me completely off topic. I had a lot of other things that I wanted to talk about and get into, and then we started down the path that we're on right now. And there's just I had so much stuff prepared here with this whole concept of the Bitcoins. And it was funny because I had read this article that was on Cointelegraph. It talked about a Bitcoin shortage as Wall Street FOMOs into the space. And we kind of, dove into a lot of these big companies. But also big news is that Coinbase announced that they are getting ready to IPO. They're at least putting all of the base, whatever they need to do. They're putting that together to IPO. That's big news. We'll see if there's an opportunity to buy in at some point if they do IPO, whenever that might be. So EA, you're awesome. All the way from Germany. Great to have you with us, EA. I used to, up until this year, I travel over to Dusseldorf once a year, typically around this period of time, and get to enjoy the Christmas markets and the Glühwein, which I don't like, but great place over there. I've been to a lot of parts of Germany, but typically we focused in on in Dusseldorf. That's where we'd have a conference there every single year. Great place though. Awesome place. So looks like we have to wrap this up. Again, tomorrow night, make sure you're here with us at 8 p.m. Eastern Standard Time. We are going to have Channing Smithson on with us, and definitely looking forward to tomorrow night. We'll dig in. We're going to talk a little bit more about the Spark token. We're going to talk a little bit about maybe the tax. We'll get into all sorts of things. There's a lot to talk about, and we're going to dive in. So appreciate everyone being here. All the new names that I'm seeing on here, like Spanner Monkey and EA and many others, and the newer names that have been with us for a little while. Awesome. We've got Jake Zamora here, William Whitmore. We've got I Kinda Pawn, Mr. TJ Michael, Texas Crypto, and so many more of you guys on here. Sir John, of course, always great to see you with us. And Tony Fisk, because at the end of the day, I'm not 100% sure, but I think it's magic. And with that, I will say goodbye. Have a great weekend. See you guys tomorrow night at 8 p.m. Eastern Standard Time here with Chip and I and our guest Channing. I'll check you guys out. I am almost out of here. There it is. I'm out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.